Have you ever spent time backtesting a pair just to get to the live environment and it not play out the way you thought it would based on your tests? You might be backtesting the wrong way. And in today's video, you'll learn exactly what not to do when you're backtesting and exactly how you should be backtesting. You ready? Let's go. Welcome back to the video, guys. So backtesting is a very, very important part of trading. It's what allows us to get better. We get to test our strategy and test its effectiveness ultimately. So you need to be backtesting as an up-and-coming trader. However, it's not uncommon that people make many mistakes when backtesting. Let's make sure we avoid these mistakes and find out the right way to be backtesting. Let's go to the charts. All right, everyone. So the pair that we're going to be backtesting is going to be GU. Okay. Now there's a couple of things I want to do or keep in mind when I'm backtesting. Number one, honesty. I need to be honest. And I think by far this has been one of the biggest issues that people who struggle to find success after they finish backtesting or spending hours backtesting. This is one of the biggest struggles that they have. They aren't completely honest. Right? And what do I mean by that? When we get into our backtesting, we tend to tell ourselves that I would have saw this move or I would have saw that move. I would have capitalized on this move or that move. It's just 10 pips or it's just 20 pips or it's just 30 pips. I get it 99% of the time. There's so many factors we're not keeping in mind when we're backtesting, and hence why we don't find much success when it's time for the live environment. In order to effectively backtest, you want to make sure that you put yourself as close as possible to a live environment that you possibly can. Also, be honest with losses. Losses are gonna happen. If you're looking for a strategy that you're backtesting that's 100% effective, 95% effective, then I'm sorry, you're not gonna find that strategy. And even if you backtested that and came to that result, you'll soon realize that it's not going to be 95%. In theory, a lot of these strategies would be so much higher in terms of win rate, but we have to factor in our emotions. Our emotions are really what's going to be the determining factor on how effective that strategy remains to stay with us, or if it's not effective at all. So we're in GU here, and the first thing I want you to do, what you should be doing, is first of all, nobody trades all day long, unless you just started trading, like I did. But ideally, you don't want to be trading all day long. You want to make sure when you're backtesting, you're only focusing on the times in which you actually trade, right? So I know for me, I only trade in New York session. So what if there was a way that I could just focus on New York session? There is. So what we're going to do is we're going to go to the indicator. We're going to click on indicators and we're going to type in trade sessions. All right. So I'm going to click on this one over here, Forex trade session / zones plus next session visible by Hexabyte. All right. Clicking on this one. Now, I know this looks an absolute mess, but don't worry. This will be cleaned up very soon. Now, what I want to do is hover over this indicator and I want to click on the settings button. So I know I only trade New York session. So I'm only going to be concerned with New York session, okay? So I'm going to uncheck every other session that's here in the inputs, and I'm gonna only leave New York. Once I'm done, I'm gonna press OK, and that is much cleaner. So now, what strategy are you going to backtest? There has to be a particular strategy that you are going to backtest, that you're trying to see its effectiveness throughout time, right? So for this backtesting session, let's take an SMA-EMA crossover. So we're gonna go to indicators once more, and we're going to type in, we can type in EMA, I believe it should come up. And if you scroll down a bit after typing in EMA, then you should see EMA and MA crossover by H Potter. Now that's on our charts, and now we are ready to backtest. Now let's go back and let's find a spot in our charts. Let's go back a bit and try to find a spot in our charts that will be ideal to be backtesting. Okay, so we're gonna go back a bit. Chart is taking some more time to load up because of the sessions, but now one of the major problems that people have when they backtest is that they tend to leave the charts as is. And you really shouldn't, because in the live environment, we have the left side, but we don't have the right side. We don't know what's going to happen in the future. And hence, if we're using it when we're backtesting, then we tend to fool ourselves thinking that we would have caught a move that we probably would not have seen. So we can't cheat that. And in order for us to make sure we don't cheat that, we're going to use our replay button over here. Okay, so with the replay button, I'm going to bring it over here and cut out everything to the right side from this point on. Now, let's start from the top and we'll work our way down. Another thing that's important when we are backtesting is that we need to also understand where we are in the market. If we zoom out just a little bit on this 1 hour time frame, we see that price had been on quite an uptrend for a little bit now, started to weaken, but let's draw out this uptrend over here that price was on. Okay, price was on this uptrend. There was a couple touches over here before it finally fell. Okay, so price was on this uptrend over here, and what we're testing is the crossovers. So basically what this strategy is saying is that the MA, which is the red line, and the EMA, which is the blue line, when they cross over, it is a signal for you to take a buy or sell depending where price is. If price is under, just a sec, if price is under the crossover, so we have a crossover over here. Let's zoom into that. So we have a crossover that happened right over here. This was a crossover. And if price is under the crossover, then we want to take a sell position. If price is over the crossover, like in this example over here, we want to take a buy. Now, keep in mind, there's a reason why I have my sessions here, because I'm not so concerned about what doesn't fall into my session. So I'm more so concerned about what falls into this red session over here, everything that's going on in the red over here. Now, that being said, I have all of this set on a higher time frame. I want to go down to an even lower time frame so I can see the fullness of the session. Okay, now I'm on the 30-minute, and I want to see during the New York session, which is shaded in red, how many times did I get a crossover? And based on the strategy, if the crossover happened below price, if price went off for a significant buy, and if it happened above price, if price went for a significant sell. Now, significant is the word, because now I also, before I even get into anything, I need to decide how many pips do I actually want to go for each trade. That's going to really matter. And that may be a variable that may have to be adjusted based on what you see this particular strategy giving out on a more consistent basis. Meaning, I may usually like to get 50 pips, but if the strategy is showing me it can consistently give me 25, maybe I should adjust the amount of pips that I go for a higher win rate. All right, so now on the 30-minute, we have this crossover over here that happened under price. So right over here, there is a crossover happened right under price. Now for this session, I'm gonna say that I wanna go for at least 25 pips, okay? If I get 25 pips per trade, I'm more than satisfied and I'm good to go. So I get this crossover. Now what I wanna see and what I wanna test is, am I going to get my 25 pips once price crosses over? So now I'm going to take my ruler on the left-hand side and I'm gonna measure from the time price crossed over here. You don't want to measure on the first candle. This is another mistake many traders make. Traders tend to believe that the crossover is going to happen and then you get your candles riding upwards. When in reality, a lot of these indicators lag. And because indicators lag, it may take a couple of candlesticks before the crossover is actually clear to you. So you have to be fair and honest, right? Because we have to be honest here on if you would have caught this move, okay? So I'm not gonna start on the first candle, maybe not even the second, but the third candle I'll start on, because by then I would have expected the SMA and the EMA to have fully crossed over. And then let's see what we got. We got more than 25 pips, right? Went off for 40 pips on the initial push and then retested and went for more. But I got my 25 pips here. All right, so that's the only crossover that happened in that session. Now I'm going to move on to the next New York session. Now in the next New York session, we had a crossover that happened right over here. And now we had a massive candle to the downside, okay? From this massive candle, I do believe, just based on experience, after this massive candle, I do believe the moving averages would have crossed over. So now on this second candle, on this second candle, we measure and we get way more than our 25 pips for that session. Okay, now moving on to the next New York session. Okay, so that's how you want to backtest. But now, once you get a couple of reps of those in, now what's really important is that you get to this area over here where you're doing the replay. As you are doing the replay, now you want to make sure you are also being fair in how things would have played out. Now in this next example, we're using the replay, and as the moving averages cross over here, we have this big candle that goes to the upside. So we have the moving averages crossing below, and we have this big candle above. On the next candle, we want to see on the next couple of candles, will we get our 25 pips as price goes to the upside, okay? So now we have our 25 pips. If we measure from here to here, we have our 25 pips. And what's also important is you determine what type of stop loss are you going to be using. Are you going to be using a set stop loss? Is the stop loss going to be based on structure? All of those things have to be defined before you get into your back testing to make sure you know when you're losing and you know when you're winning, and you can compare the differences between the two. So now let's get to the next New York session, all right? So we're gonna fast forward over here, and we're going to go to the next New York session, and let's see what happens here. All right, so in the next New York session, we're gonna wait for that cross, and that crossover is over here. Okay, this crossover happens. I went a little too far, but once this crossover happened over here, again, crossover happened down here, we had price coming above the moving average, and if we measure, we know already just based on the candlesticks, even if you didn't enter in the next candle, we had our 25 pips for sure. And this is what you want to continue to do. You want to do this as much as possible just to give yourself accurate depictions on if this strategy is a profitable strategy or if it's not a profitable strategy. But you have to make sure you remember those rules, okay? Number one, you have to be honest with yourself. Number two, you want to make sure that you're only trading in the time frames that you usually trade in. You shouldn't be worrying about other times in which you don't trade. And finally, number three, you want to use your bar replay just so you're not thinking that you would have caught a move. Instead, you can make that decision right there and then and figure out if you would have been right or wrong. So if you do those things, as well as document everything and actually get a tally on whether the strategy is profitable or not and what situations you plan on using the strategy, then you're gonna see your trading improve drastically. So again, backtesting is one of the most important elements to improving your trading. Be sure you're doing it the right way, and you'll continue to see progress in your journey. So I hope you guys gain value in this video. Please like, share, and subscribe. Jordan the Maestro. Until next time.